If you are a forex trader who trades XAU, USD, or you look at gold regularly in your analysis, I have something huge to show you, and it's a really, really big red flag and something you should pay attention to if you trade this market. So stay tuned, let's get into it. All right, guys, welcome back to the channel. Now, today we're going to be talking about gold. And gold, let me just say, I think that it is probably one of the most popular markets to be looking at here going into the end of the year. Now, what we know about the end of the year is it tends to be kind of low volatility and quiet, but not gold. We saw a big breakout here last week, and it was a huge bullish catalyst. But guys, the data is in, and I've got to show you something that's really, really important if you're going to be trading gold. So stay with me here. Okay, so gold broke out, huge bullish implications there, right? We were in this range, price chopping back and forth, and now there's a lot of people who are super bullish on gold. It's time to buy, and let's go look at this on a pullback. But I want to show you guys this because this is so important, and it's a huge red flag that I saw this morning when looking at this trade. Now, again, if you're the average trader, you're out here, you're seeing this thing break out, big movement to the upside, saw a little bit of rejection, but of course now there is some pullback to a level that looks really appealing. But I think, you guys, I think that this is a trap. It's a trap. I wanted to include that if you're not already inside of our private Discord channel, going into the new year, we have a whole load of trading ideas and setups that we are going to be acting on within the group, myself and the rest of our analyst team here at A1 Trading. If you would like to join our private Discord, you get access to all the trade alerts shared by myself, by our other top analysts. You can join our coaching calls and ask your questions. You can jump into our chat rooms and you can meet traders from around the world. If any of that sounds helpful to you, then make sure to hit that link down below in the description. Sign up using the promo code that's down there, and we'll see some of you guys in there. I'm thinking that the gold pullback here and buying this could be a huge trap going into the end of the year. Now, what I'm going to do, I'm going to show you something. It's not going to be a popular thing because right now the average retail trader is buying gold, and I'm not saying that out of opinion. I'm saying that out of fact. Let me show you. So check this out, you guys. We're here on the website. And on the website, we have this retail sentiment tag. By the way, if you want to use this anytime you'd like, head over to the website, a1trading.com. Let me scroll down here and click retail sentiment. And let me show you guys this because this is really, really important. If we scroll down, the first thing you'll know is that, okay, if we find gold on this list, come down here, there it is. XAU, USD, and silver, by the way, both of them are heavily being bought by the average retail trader. So this is not, again, this is not a statement based on opinion. This is fact, right? We know from myfxbook.com, the data being tracked there is predominantly retail traders using their services there. And what we can see is that retail traders right now, it's a crowded trade. 62% of retail traders are going long on gold and looking at this pullback as an opportunity to take advantage of a pullback. Don't get me wrong, that'd be my first reaction too. But again, the red flags don't end here, you guys. I got to show you something else in just a second. But first, what does this tell us? Well, the average retail trader, 62% of which are long on gold. They're buying gold. They're picking up buy positions. That's a scary place to be because what we know is that on the average move, retail traders lose money. They don't make money. They're not on the right side of the trade most of the time. And so if we see them piling into long trades, that's red flag number one. But that's not all. Let me show you red flag number two. Just recently, we saw COT data come out, and this is really what made me get on the YouTube right away, get on the camera here and talk to you guys, because this is what I'm talking about. I want to show you guys this. Here is the COT report. Now, if you don't know, the COT report is the Commitment of Traders report. It is something that is filed by large institutional traders on a weekly basis. Now, we get Tuesday's data on Friday. So I know it's a little bit confusing, but basically we got last Tuesday's data on last Friday. And so it is a bit lagging, don't get me wrong, but look at this, you guys. This is red flag number two. Now we are looking at the non-commercial, institutional, basically your hedge funds, leverage funds, banks that speculate in the markets, and what their positioning has been. And what we see here is that since late November and throughout December here, we have seen steady selling of gold. And even now, this is what I was waiting for last week. If you were on the streams, you heard me talking about, I'm waiting to see what the COT about gold says. They're selling. The institutional traders are not buying this market. So if you're out there and you're aggressively buying it, I just want to caution you, because what we can see here is we can see that institutional trader is going short, or the institutional traders are going short and the retail traders are going long. And so it's becoming this situation where we have the smart money and the dumb money diverging. We see the average retail trader getting long on gold, going long, buying, and we see the average retail trader, the institutional traders moving away and even dropping positions long on gold. So again, let's recap. Let's go back to the chart here for a second. Again, big sell pressure coming in overall on gold in the last few months or so, right? We saw that top out at 1877, and myself included, you guys. I was looking at this thing and I was saying, wow, it broke out of this range. That's a big deal for buyers, right? We saw a huge push up there, but then we got this big rejection. And now as we pull back, what I thought was a decent idea when I went and checked the data, which I do for most of my trading, right? I'll go see what the numbers are saying, institutional traders, what their positions are looking like, what retail traders are up to. And those two red flags are hard for me to ignore. So what I am saying is that I am very cautious of buying this, because I know, and probably a lot of you guys are looking at this the same way. That's a big breakout, retest, very cookie cutter example of a very common trade. So what I'm saying here is that this pullback here today, I think is worth ignoring, which is weird because I might be completely wrong about this. We might see this thing run to the upside, but everything else stacked in my favor. I actually picked up a Euro USD short position for a very similar reason, because Euro USD and gold, they're not a 100% confluence or anything like that, but they do tend to favor, it's that exchange between the dollar and some other alternative. And so when we look at XAU USD, right, it does seem like there's some possible bullishness around the corner for the dollar here towards the end of the year, which, as we know, if we're looking at gold XAU USD, well, if there's potential dollar strength here, right, if institutional traders are looking for more dollar strength towards the end of the year, we could be in for a little bit of a fake out here on gold, where we saw a big jump up that attracted a lot of buyers, and clearly we see retail traders getting long right now. And as institutional traders sell out of their position, I'm just saying, guys, I think be very cautious about this gold move. Now, let me ask a question here. Let me be a little bit of devil's advocate for myself. What if I'm wrong? What if this level completely holds, and what we see in the next COT data reporting is that institutional traders are now starting to get long? Okay, here's the worst case scenario for me. Worst case scenario is I don't take this trade and I miss out on a good opportunity. But again, I can't do it if it doesn't meet my trading strategy criteria, which does happen to include retail sentiment as well as institutional sentiment. So if I know that the institutionals are kind of looking steady to the sell side, and then we know that the retail traders are going long on this thing, I can't justifiably take that risk right now, because I think that puts me at a disadvantage. Remember, if you've been watching my channel for a while, I like to trade with the direction of institutional traders to the best of my ability, which happens to be through COT data, 13F filing, and watching what retail traders are up to. And so again, my first reaction, just like probably the average trader, was to say, wow, pullback looks good for a possible buy and continuation. But I'm throwing up the red flags. We're throwing up the yellow flags in soccer or football, whatever you'd like to call it. Like, we're being cautious here because there is some very telltale data out there that's telling us that this could be a little bit of a trap. Now, what if I'm wrong? What if this level does hold and we start to break higher? One thing I would say is that in that case, maybe we get the idea of COT data updating. Now we see buyers coming in from the institutional side, and we start to see retail traders kind of drop off their buy positions, right? As we very often see, when retail traders are in the money, they close out of profits very quickly and they hold on to losses very long. So maybe we see that reversal, but that's the sign that I'm going to wait for first. The first signal I'm going to look to actually get long on gold would be to see if institutional traders are accumulating it, number one, and number two, that the retail trader is actually starting to short it and to fight the trend as they usually do. And in that case, maybe we have signals for momentum higher. But that's not what we see right now. If anything, the signals are pointing bearish. And so for me, a break back into this range, as weird as it sounds, may actually now be the play, especially as I am dollar bullish. As you saw my position there, I showed you on Euro USD. I've got one lot short on Euro dollar. We'll see if I look like a fool by the end of the day or not, but it's starting out pretty good. So we'll give it some time, see how it goes from here. But yeah, I just wanted to make that announcement there before before a bunch of traders go look at gold. And just be cautious, just be aware. I'm not telling you to go short it or anything like that. I'm just saying that if you're looking at the long side of it, just be cautious, keep your stops in mind. You know, be aware that things could be a little sketched there. But again, big looking entry points there. I know that is a very, very popular looking trade setup, right? You've got a lot of things that look very clean, right? You've got the low here, right? Little swing high, 38.2 is probably looking pretty attractive as it comes to support. Again, one of my favorite sort of trading style setups is right there in front of me, but the difference is there's not that institutional backing, and it does look like retail traders are on the long side. So again, just a note of caution for you today. I hope that this video was helpful to you. If it was in any way, shape, or form, hit that like button, subscribe to the channel, and we'll see you next time. What's up, guys? Thanks for watching today's video. There are more videos available on our channel here and here, so go ahead and click into that for some more free trading content. With that said, thanks for watching. We'll see you back next time.